Everyone wants to know when this Bitcoin cycle will peak. Today, I'm going to show you 3 metrics on my website that have historically marked major tops. They give us a framework for understanding where we are in the cycle and what type of regime this market is currently experiencing. So let's dive in. First up, the market value to realized value, the MVRV. This compares Bitcoin's market cap to its realized cap, which is basically the aggregate cost basis of all holders on chain. So the key point here is these statistical bands. They're calculated using historical standard deviations to basically show when are we overvalued and when are we undervalued. And these undervalued and overvalued zones in Bitcoin's market history. So you might notice something interesting here. Every market cycle peak in Bitcoin's history has occurred when MVRV has pushed into these upper bands, this red zone here. So these are all the outliers in the MVRV data set. And when we apply these statistical methods, we can see when they occur, right? So in 2011, we peaked at around 8. In 2013, we hit around 6 on MVRV. In 2017, we reached 5. And in 2021, the first peak was actually around 4, and then it diverged on the second peak despite going to a higher price in late 2021. Right now, we're sitting at around 2.2, yeah. And so right now we're elevated, but we haven't really hit those extreme overvaluation levels yet. So historically, when MVRV crosses above this 1 standard deviation band, the +1 standard deviation bands, and stays there, that's basically when the distribution phases start to begin, right? This red line here. So what makes this powerful in the way that we're looking at it, right, is basically it's adjusting for Bitcoin's growing market cap. As Bitcoin gets bigger, the peaks get lower, which makes sense, right? As volatility diminishes, it takes more liquidity to move the market, right? So, but these stat bands basically are adjusting for that, giving us better context in a numerical sense in the actual data set, right? So if you translate these MVRV levels back to Bitcoin price, the upper regions, the upper bands here, I did some math earlier, and it's suggesting basically that resistance zone around 140, 130K whenever we go to the +1 standard deviation bands. So that doesn't mean we will hit those levels, but I think it will basically show us where historical overvaluation has occurred. And I do think that we'll get to that level, but I think it will take some time from here and until the end of the cycle. So the next chart I want to look at is the NUPL by Cohort Risk. So this is one of the most sophisticated charts on the site, in my opinion. So the NUPL stands for the net unrealized profit and loss. So basically, this is a percentage of the market cap of Bitcoin's market cap. What percentage of that market cap is in unrealized profit versus loss, right? So instead of looking at the normal NUPL, which is on the website as well, you can look at that. This chart combines basically 5 different perspectives. So we're looking at the overall NUPL. We're looking at the short-term holder NUPL, long-term holder, AVIV, which is the true market mean from Cointime Economics. You can read more about that on the site if you want. And finally, the long-term holder profit to volatility ratio. So the magic in how these are combined is in how these are combined, right? So 50% of the NUPL metrics and 50% of the normalized long-term holder profit to volatility ratio, that's what makes up the chart. So 50% NUPL, 50% long-term holder PVR. So that creates a sort of balanced risk score. So if you look at the raw risk score here, and I just deselect some of these, you can see that that gives us an overall risk score once we combine them all, right? So that accounts for unrealized profit and the volatility adjusted profitability that is in the long-term holder profit to volatility ratio. So then this chart basically maps out this risk score into different market phases. So we have max pain, which is in dark blue, basically generational buying opportunities throughout history, right? Just statistically speaking. And then teal, which is the capitulation, fear, which is in green, optimism, which is in yellow, and greed, which is in orange, and euphoria, which is in red, which is historically top risk on these indicators. So I like to look at it from a rolling statistical volatility method. So instead of the cumulative volatility, I'm looking at it through a 4-year rolling window. And that sort of lines up with Bitcoin's 4-year cycles. You can look at it through different windows if you'd like, or just the cumulative. So when we look at this chart and we look at the major, we look at these colored dots, every major peak has historically shown to be in a sustained red reading level, right? So that's when all cohorts are in extreme profit simultaneously. And currently we're actually seeing sort of a shift from greed to euphoria. So we just had a red reading at around 120K. All right. So right now we're profitable across 99% of cohorts. So obviously the people who bought 124K aren't in profit, but once we get to that level, which right now we're at, I think 123 or 122 at the time of recording. But typically, these large distribution points typically occur when we're seeing that sustained euphoria. So for example, in 2017, we had a major amount of these euphoria dots. In both peaks in 2021, we had a major distribution in 2021. And then in 2013, we also saw this, and in 2011 as well. So what I'm watching for this cycle is when those red dots turn consistently red and the price chart, and they stay there for weeks. That's historically, marked these distribution phases. Another key point about this chart, the beauty of it is in divergence as well. So when sometimes the short-term holder NUPL will spike, even though the long-term holder NUPL might still be undervalued comparatively, and that's healthy. But when all cohorts spike together, that's when you see these major tops start to form. And I mean everyone. So everyone's feeling insanely good about themselves, buying low and seeing the price go up a lot, right? So the last metric I want to look at is the long-term holder realized profit to profit and loss ratio. So this measures basically actual profits and actual losses being locked on chain by long-term holders. So these are conviction holders who've held for over 155 days. And this chart is pretty simple, but really powerful if you can just looking at how it performs, right? So above 1 on this chart means that long-term holders are realizing more profits than losses. And then below 1, conversely, that means they're realizing more losses than profits, right? So for a long-term holder to realize a loss, meaning they sold Bitcoin for lower than their original cost basis or average cost basis, that typically only happens during severe bear markets or major capitulation events like we saw in 2021 and 2022 and all prior bear markets. And we also saw it a little bit this cycle when we had these corrections. So looking at the spikes in bull markets, see how quickly they start to shoot up like logarithmically? That's because, these long-term holders are realizing profits that are 10x, 100x, even sometimes 1,000x, depending on where they bought it, greater than any losses, right? So it's a ratio, it's logarithmic. It's going to have these insane spikes because of the amount of profit that they're realizing. So in 2017 and in 2021 and in prior cycles, we saw massive sustained profit taking by these long-term holders near the tops. So this ratio would spike to extreme levels as these patient holders distributed into these extended rallies, and they did so on the way up, right? So then in bear markets, this basically crashes, falling off a cliff in every prior peak. So long-term holders either stop moving coins entirely on chain, or worse, some are starting to capitulate and then realizing losses, and then that's when you start to see values below 1, meaning they're in loss. So right now we're seeing this cycle, we're seeing positive readings right now at least. So we were pretty low, but it's starting to go up again. As you can see, this cycle, we've seen multiple different periods of where they've been pretty high on a USD basis or on a BTC basis, and then they've subsequently fallen back down. You can see this when we hit around 73, 74K in the Trump rally, and when we hit 100K for the first time, and then finally when we hit around 124K a couple weeks ago. So long-term holders are clearly still taking profits along the way up. That's not something that we haven't seen. That's something we've seen before, but right now it hasn't spiked up in the same way as these prior moves and in prior cycles. So it's still a little bit low now, and I expect this to start to go up. So it's something that I'm going to watch. And one cool feature about this chart is you can toggle between USD denomination and Bitcoin denomination. So in USD, you'll see the absolute magnitude of the actual USD that they've realized, right? And if we turn the tooltip on, you can actually see how much they've realized. So it's something to look at if you want to check it out. Both tell different stories, the BTC and the USD denomination. The BTC one is a little bit more consistent in its peaks. The USD one is consistently going up as the price continues higher, right? So the realized profits are going up more in terms of USD. So what I'm watching for, if this ratio starts to spike to these prior levels like they have in the past, and then combining that with these other two metrics, that's basically showing us when extreme readings start to occur, and that's when I'll start to get pretty cautious, right? So let's put this all together. Let me start to end the video. So the MVRV, I'm looking at it to push into these statistical bands here on the +1 standard deviation. The NUPL, I'm looking for it to, the NUPL cohort, I'm looking for it to go above this around 0.75, 0.7 risk. So right now it's currently at around 0.682, right? And then the long-term holder realized profit and loss, I'm looking for this to start seeing conviction holders aggressively start to take profits. And historically, when all these three flash at the same time, that's marked pretty high major cycle peaks, right? So right now we're obviously in a bull market. Profits are being taken, but we haven't hit those extreme levels across all of the metrics simultaneously. And I think Q4 has historically been pretty strong, and I think it will continue to be. And that's something I'm watching day by day in the data. So here's how I think about it from my own perspective. If we hit all these three extreme levels, I'm not going to sell everything, but I'm definitely taking some profits and reducing risk, right? So if only one or two are elevated, I'm watching, but I'm not going to panic, right? The thing is, even if these start to get really overheated, I'm not selling 100% of my Bitcoin, right? I'm going to start to sell maybe 10, 20, 30%. And I'm actually not going to sell all my Bitcoin. I'm going to hold a lot of it during the bear market just because I think that, honestly, I think this cycle might end up being different in the sense of institutional adoption, but I do think we'll see drawdowns like we have seen in prior cycles. So I'm still going to take some profits. The beautiful thing about on-chain data is that it shows us what's actually happening, not just speculation, not just hopium. It's actual data from the blockchain itself. It doesn't lie. It's not going to tell you that Bitcoin's going to 1 million because it clearly does. It's clearly not showing that, at least right now. So all these charts are for free on chartinspect.com. You can explore them yourselves, adjust the parameters, see different methods of smoothing, right? So you can check the website out if you want. There are many other different metrics that look at different market perspectives. So these aren't the only three I'm looking at. So if you found this helpful, feel free to subscribe, like, comment what you're watching the most on the website. And yeah, I'll talk to you guys later. Bye.